On this week's Emily Now episode, I'll be talking about mortgage and loan disasters. I'll give you some examples of disasters, teach you a few things that maybe you can learn to avoid some disasters, and hopefully you find this episode helpful. So stay tuned. My name is Dylan Gallagher. I am the founder of emilynow.ca. Each week we put together this Emily Now episode to teach you more about mortgages and loans in an effort to make sure that you are aware of the things that you need to know to do more. We believe that if you're informed, that you'll be able to make better choices, and those better choices would lead to financial results that would help you save for the future, invest in new opportunities, or who knows, maybe give back to the community around you. You can find us on Twitter at EmilyNowCanada. You can like us on Facebook, subscribe to us on YouTube. I think we're still on Google Plus as well. You can check us out there. And with every episode, we like to answer a few questions. And given that this week's Emily Now episode's theme is disasters, let's start with the first disaster that most people will encounter. What should I do if I can't make my mortgage or loan payment? Believe it or not, this happens. They'll borrow money, next thing you know, life doesn't quite work out the way they thought it was going to, and all of a sudden, they can't make their payments anymore. So what should you do? Well, first thing that you need to do is get a hold of whoever the bank or lender is and let them know what's happening. Most banks and lenders do not want to spend their time chasing you for the money that you owe them, for the payment that you owe them, and it costs them money to do that as well. Ultimately, they can recover that from you, but it still takes time and effort. So the first thing that you can do, if you find yourself in this situation, is get a hold of the bank or lender and tell them what's happened. Tell them why you can't make the payments, and if you have a reason why you can't make the payments that's temporary, then work with the lender to help them understand, here's what I'm doing to fix my situation, and I expect to be able to get back to making payments at this point. However, if you're not in a position to do that, then let them know that, look, this is the position I am in. I can't do any more than I'm doing right now. What's the best way for us, excuse me, what's the best way for us to deal with this? And so a good bank or lender will probably sit down and have a plan with you. That plan may not be amicable, meaning they may end up calling a lawyer, they may end up going to court, but if you're able to work with them, that's always a better result than working against them, not responding to their phone calls, not responding to their letters, and not responding even to their lawyer, because then what happens is when you stand in front of a judge, you may not get the sympathy that you would have otherwise had from the judge should you have been able to maybe work with the lender or pick up the phone and talk to them. And again, many lenders don't want to see you in a bad position. They don't want to engage lawyers. They don't want to have to come after you for the money. But if you're not going to communicate with them, then they kind of have no other choice. So what can you do if you can't make your mortgage or loan payment? Call the bank or lender and tell them that you can't do it. Tell them why, and then come up with a plan for either repaying them, or if you cannot repay them, then coming up with a plan that sees everybody get the best result possible. The second question today is, how can I avoid a mortgage or loan disaster? And the problem with disasters is you can't really see them coming. At the end of the day, you only know you were in a disaster after enough time has passed by that you can look in the rearview mirror and say, wow, that was a train wreck. That mortgage or loan that I was getting, that was just not a pleasant experience. In fact, I was with some friends and a past client this weekend, and they were talking about how borrowing money is absolutely brutal. I mean, there are unique cases of people who think the process is just wonderful and the person they were working with was wonderful and everything just went according to plan. But the truth of it is that borrowing money isn't an exciting process. It's not fun. It's not like going on holidays. It's not like buying a new vehicle or buying a new house. You're taking on a financial burden with the expectation that it's going to get you further down the road in the long run, but today you still have to bear that burden. And so there's a couple of things that you can arm yourself with to avoid even getting into a disaster. The first thing that we would suggest to you is know how much time you're going to need to borrow money. It's very common for us in what we do with emilynow.ca and the requests that come through that people are always at the 11th hour. I need money tomorrow, I need money by the weekend, I need money by next Wednesday. And the reality is that the less time you give yourself to get a mortgage or a loan, the higher the interest rate is going to be, because the type of lender that you have to go to, they charge higher rates of interest to be able to respond quickly. So here's kind of the general rule of thumb. If you want to be able to get a mortgage from a private lender with 24 hours or 48 hours notice, you can make that happen. If you want, if you need a week to put a deal together, then maybe a mid-market lender or a traditional bank would be the option. But you really have to make sure that you understand that banks in particular, if you want the very best rate in the marketplace, then you're going to have to go to probably a larger institution. Those larger banks and lenders, they have layers of management and process and bureaucracy, and that just takes time to get through. You can't expect them to turn around quickly. So you're going to need a few weeks with a traditional bank, and if you don't have a few weeks, then you're going to end up going to a mid-market lender or a private lender and paying higher interest rates, and then maybe refinancing them with a traditional lender down the road. So know how much time you need. Know what documents and information you need. Again, some people will say, yeah, I have all the paperwork I need, and then you start to see the paperwork come in, and it comes up pretty short. Maybe they don't have the appraisal that they thought they had, or maybe you don't have the pay stubs that you thought you had, or maybe the employment letter is now a few months old and it doesn't work anymore, or the financial statements for your business, the last time you actually printed them was 6 months ago. And so make sure you know what documents you're going to need, what information has to be put together so that you can be prepared. I met with a client last week who is looking at doing a deal in the spring, and I had let him know that if he was looking to transact, that 90 days before the date he's going to want to start the process. And he was pretty keen to say, okay, well, that's great, but could you send me the document checklist tomorrow so that I can get started on putting the paperwork together? Well, it's pretty easy to see that he's trying to stay clear of a disaster that might come from not being prepared and not having his information together. And then lastly, know the math. This is a common, very common disaster or criteria that leads to a disaster, where someone will say, look, I thought I could get this much money for this house, or I thought I could borrow this much money for this piece of property, or I thought our business could just go ahead and just borrow this kind of money, but they don't actually understand what the math is to be able to get that approval. They don't understand that the income, what the income required is. They don't understand either the down payment or their equity. So make sure you know the math. And here's how significant it can be. If you're employed and you have a job and you're used to getting a paycheck every 2 weeks, and now you go to the bank and you say, look, I'd like to get a mortgage for this home that I'm purchasing, and they say, how much do you make? And you tell them, I make this much. Well, as they go through the process, if they end up getting your pay stubs and seeing that the amount of money you make is actually less than what you've told them, well, that can seriously change the amount of financing that you're approved for. And if you haven't given yourself enough time, you may not know how to respond quickly enough that if the lender were to drop the loan amount, where's the extra money going to come from? Or if it turns out that you just thought you made X amount of dollars and it turns out that you don't, how do you now adjust for that? Or even in a business, if a business says, yeah, we thought we had our financial house in order, and oh, we forgot that we still owed GST to the government, or we didn't record that properly in our financial statements. Well, by the time the bank starts going through the paperwork, if you don't understand the math and the implication of being right or wrong with the information you've provided, then that can change your approval. So a couple key ways to avoid a disaster: give yourself enough time, know what documents and information you need, and understand just the basic math involved in your approval so that if anything goes wrong, you know where to adjust. Speaking of disasters, here is a real-life disaster that we saw come through emilynow.ca in the past week. A customer was purchasing a multi-unit building, meaning it was a small apartment building, had 6 units in it, and they were scheduled to close on it. It was just over $1 million, $1.5 million actually. And the disaster was that on the Monday they were supposed to close, it turns out that one of the borrowers didn't have the cash. And the reason they didn't have the cash was more of a technical reason. It was supposed to be coming from another investment account. It never got transferred, and it looks like it was going to get held up. Anyway, the point is, $1.5 million purchase. They were supposed to have the cash to close. They did not arrange for a mortgage whatsoever. This was going to be an all-cash deal. And so they were panicking. So we were able to help them. We were able to get them a mortgage for 1 week, and the interest rate was 24% a year, or 2% a month. Now, someone might go, whoa, that's a ton of money. 24% a year on an interest rate basis is a lot. For a week, it's the cost of doing business. So in this particular case, the disaster was that the clients thought they had their cash. They thought they had it lined up. When they actually went to pull the trigger and get the cash from wherever it was coming, it wasn't going to be available for about a week. What did that mean? It meant now that they had to go back to the vendor of the property, negotiate an extension for a couple of days so that the mortgages could be registered, the paperwork could be signed, the funds could be advanced. And not only did they have to go back and do that, they also had to pay a high interest rate and a pretty big fee in order to get the money from a private lender who was able to turn around the deal quickly. So had they have been prepared, then they wouldn't have had this particular disaster, and they wouldn't have even known they were going into this disaster until they started to figure out that, look, our cash probably isn't going to be ready, and now what do we do? And so this happens all the time. This is not a one-off instance. People underappreciate how much work has to go into getting financing, and if you get out in front of it, it's not a big deal. It's only when you think things are going to happen that they don't end up happening, and then you run out of time, you don't have all the information that you need, and ultimately you really don't know how the math works, and so you're stuck and you're without options. So there's a real life example of somebody who was stuck, who had to pay the price for not being prepared. And if you find yourself in that position, or you're not sure if you're prepared, I would encourage you to visit emilynow.ca, where you can get answers to those questions. You can see the documents you need, see what the math is going to look like. And if you're already up against the wall, if you are at the 11th hour and need some funds, you can go to emilynow.ca, and we'd be happy to help you as well. So for those of you that have been paying attention to the stock market, the last week and a half has been brutal. It's the price of oil, the market in general, people talking about Germany, hedge funds getting rid of their cash. I mean, it's carnage out there. And I made a comment last week that I was surprised at how surprised people are, because in my opinion, when I look at what's happening in the stock market and what's happening in the broader global economy, even though I'm not an economist or a stock trader, since the financial crisis, which I was deeply involved in because of the nature of our business, I don't think anything has changed in the world. You know, when I look around, I see that things are relatively flat everywhere, that even low interest rates are not creating economic activity anywhere. Like, there's no hot spots anywhere in the world. There aren't any big ideas that are driving, societies and economies forward, like the locomotive engine, the invention of electricity, the invention of the laying down of railway tracks. Like, there's nothing really significant happening in our economy right now that is forcing things to happen. In fact, the real income that the average person is taking home has either remained the same or is less than it ever has been. And at the same time, you've got companies that are just stockpiling cash, and they don't know what to do with it. So when I see the market doing what it's doing, I think that the fact that it had even risen at all over the last couple of years is amazing, because there's been no reason for it. There hasn't been anything happening. The U.S. government has been propping up the economy, arguably, with their quantitative easing. The central banks and countries all over the world have been keeping interest rates low in an attempt to try and kickstart some activity, but nothing is happening. And in fact, when you see that in the European Union, that Germany now is admitting, look, there's nothing happening in our country either. There's no growth. There's no creativity. There's no innovation happening that's really going to take our economy to the next level. So what does that mean for all of us? Even though there's lots of variables and there's lots of opinions and there's lots of people that if they like to hear themselves talk like I do, they'll continue to just sort of share these opinions. But what does that mean at the end of the day? I think what it means at the end of the day, in our business anyway, is that we've got to get up every day and figure out how to help people access the financing that they need. But if people and businesses, if they're not looking to be creative, if they're not looking to be innovative, if they're not figuring out how to add more value to the marketplace instead of just taking value, but if they're not figuring out how to give value, then kind of our job is irrelevant as well. So I think you need to sit back and say, if I'm a business owner, what business are we in and how are we adding value to the economy? How can we grow what we're doing? How can we pursue new ventures? How can we pursue new innovation? How can we not make incremental improvements to what we're doing, but how can we make massive improvements to what we're doing that could maybe create new categories or create new industries? And if that were to happen on an economic level right across the board, then I think we would see lots of changes happening. I think people would probably make some more money. I think companies would understand now where to put their cash because they'd see innovation and creation happening around them and they would be getting a return on that cash. And generally speaking, I think that we've just got to do a better job of trying to create the world that we want to live in instead of just living inside of it and making marginal improvements everywhere. So anyway, that's my rant today, or my view on what's happening in the stock market and as it relates to financing. We get up every day to try and make it easier for people and businesses to access financing because we believe that financing is a tool and a resource that can be used to drive growth and to drive innovation. And so if you're one of those people or you're one of those businesses, we'd encourage you to jump on emilynow.ca to see what kind of financing you could get access to, or to see what would be required to get access to financing. And so we thank you for joining us on this Emily Now episode, and we'll see you next time.